War is breaking out. How should you change your investments? Are bonds dumb? And can you get rich by day trading Australian currency? Let's find out. Welcome back to the Personal Finance Clip Show. Hey, Jen.
Jeremy, where are you?
Is my voice echoing? Does it sound more echoey to you, or is this microphone solving that?
It doesn't sound more echoey.
Okay, good. It sounds echoey to me, but hopefully I'm in a new studio here at my home because I got rid of my old home office and I had like all this like foam padding, like soundproofing stuff up, and now I don't.
And you got a white wall. Boring.
I got a white wall, but it's going to be painted and background set made one of these days.
You're going to do like a not stop motion, like a time lapse video of you painting. Are you painting? Or are you going to hire someone?
I'm painting, Jen.
Okay. I don't know.
Not that big. No, I really wanted to like lighted shelving back there. And I've been like hand wringing about like, do I know how to do it? And I think I'm just going to do it myself.
Listen, painting is no joke. Like my friend and I painted these couple walls. And it's like the edges are real crunchy. So.
Yeah, no, it's true. Yeah, there's definitely an amateur.
I sometimes wish I had hired someone when I look at these corners.
Yeah, that's even when you tape it, the paint can go on the tape.
But work.
But that's not what's important because Jen, I have bigger news that I actually haven't even announced yet. It's not really news, but I went on a trip. It was about a week and a half ago now.
Yeah,
and the day we were leaving to come home from the trip, it was like 10 a.m. and we were check out of the resort we were at was at 11 and the phone rings and the front desk is like, you can't go to the airport because the road's blocked or something. And we're like, what?
Dun, dun.
I know. And we're like, actually my wife Andrea answered that call and she's like, well, can you drive us? Is there like alternate like transportation? And they're like, you don't understand. No one's leaving. And we're like, what?
It's creepy.
Because we were in Puerto Vallarta. And you may have heard that there was some cartel warfare happening. And we literally booked this trip like 6 days in advance. Because I think I might have mentioned on a podcast, we were like going to go check out a venue for a wedding. And there's like a very nice resort that's down there. So we booked it like 6 days in advance, just a 2-day trip. We went down on a Thursday night. We're going to come back Sunday morning, I guess. Yeah, like 2 full days and 3 nights. And then the day we were literally like packing to go to the airport, that is when the craziness happened. And if you haven't heard, basically the U.S. or I guess the Mexican government with some help from U.S. intelligence did this like raid on El Mencho, I think his name is, who's like the big cartel boss. And he ended up dying in this raid. And so then there's like this huge coordinated cartel attack where they were, lighting cars and trucks and buses and stores on fire and basically bringing these like cities into a gridlock. And that was happening. And it usually doesn't happen in resort towns like Puerto Vallarta. They kind of consider that to be off, what's called off limits because it's a resort and they don't want to mess with the tourists. But this time there was like an escalation. So it was, it was very weird because we were like looking out, we weren't right in the main part of the city where it was happening. We were about 20 minutes away, but we saw, we'd look out towards the city and we'd watch the city burn like all day. That's
so crazy
on that Sunday. And then if we turn the other way, there's fires the other way too. And in this part of Puerto Vallarta, or in this part of Mexico, there's only really one road because there's like the ocean and then the road and then like the jungle.
Right.
So there's not like alternate roads you can take. And so I'm like, dang, that one road is being blocked on both sides.
Insane.
Yeah, we were fine. We never were especially close to the violence. They never came to the resort. The fires weren't especially near us. We saw them when we eventually left the resort. We had our, just recently turned 1-year-old baby with us. And I was, a little bit worried about the violence coming into a resort, but not really because there's a lot of resorts down there. And it seemed like they were doing this cars on fire in the middle of the road thing to block traffic, not like murder and tourist thing.
Right.
thankfully. But I was worried about, running out of diapers and formula because the resort doesn't have that stuff.
Mm-hmm.
And if the roads are blocked, we were just supposed to be there for 2 days. It's not like we packed for a long time.
Right.
Yeah. It's also very interesting.
Insane.
Yeah. It's like an interesting lesson in news because the day it was happening, I realized how slow mainstream media is. Um, you know, because we were literally watching the city burn for like 12 hours. And I would like go to CNN and New York Times and even go to Google News and search Puerto Vallarta. And it took like 6 hours before anything showed up. And it was like the Hindustan Times or something, some like international newspaper picked it up. And then like the next day, Monday, it was like front page New York Times, front page
Right.
CNN. So it was literally like a 12-hour delay from what I thought was like breaking news to
Yeah.
um, what was actually going on. And the other interesting thing I saw was, so we were then going to Twitter and Reddit, which is like, real time. You could see like people's firsthand accounts, but then there's like lies. There's like misinformation.
Yeah.
And I was believing it too. I consider myself pretty internet savvy. But I was under the impression that the airport was closed, that the airports, because this happened not only in Puerto Vallarta, like the other main city it was happening was Guadalajara, but it was happening even other places too. But I was under the impression that they were under attack. 'Cause I saw like planes burning and gunmen in the
Mm-hmm.
airport and yada yada yada.
Mm-hmm.
And come that was not true according to like firsthand accounts of people who were at the airport and the airport, like their announcements themselves. They're like, we have not been breached. There's been no attacks in the airport. We're protected by the National Guard. We're open. They never closed. They're like, but lots of flights are getting canceled, so you might want to check your flights and make sure you have safe transportation to the airport. So it's really weird to kind of see this. It's a scary time because you know we were we were able to see the smoke. We were that
Right.
close, but we still were relying on Twitter's misinformation to figure out like what's going on. It's pretty wild.
So nuts. Yeah, I definitely saw, I'm assuming what is a fake airport video, like a couple hours before you texted me, and I was like, oh my gosh. Like I was so nervous for you. Um, but I'm glad you're back safe.
Yeah, I
What a
know. I feel like
whirlwind.
it may have been worse for our friends where like they're seeing these like terrifying images and we're like, we're there. But from our perspective, we're like, yeah, we're generally feel pretty safe. The resort was operating normally. Like people were like
Mm-hmm.
sitting by the pool and there was still food and all that
Right.
stuff. But yeah, it's
Weird.
definitely a little nerve wracking.
Ooh, well, you're back. Safe.
Yeah,
Kept both
back
kids alive.
safe. All like flights got canceled. We ended up having like three different flights at the same time, on different days
Yeah,
based on them
yeah.
being canceled. And then like kind of the 11th hour, we were able to get a Southwest flight on Wednesday. So we booked like 3 extra nights at the hotel.
Ugh,
Um,
Southwest. I would have been like, pass.
and actually, I mean, it ended up better than our alternate. We came down, we flew down to Alaska. You don't want to hear about my
I
whole
would have been like,
travel
no
story, but
thanks. I'll take the next
yeah, you're
flight.
like, no, I'm gonna go
You guys don't
see
even
if the
have
cartel's
assigned
doing.
seats.
Yeah. They have assigned seats now. Actually, the first time
Oh,
ever
they
I flew
do?
Southwest, they
I
do.
haven't
So I actually
rode
prefer the no
Southwest in
assigned
like
seats.
10 years. I can't do no assigned
Really?
seats.
Oh,
I don't
I
want
love
to,
it.
I don't like that false sense of urgency when you're trying to get on the plane. People are already so messed up when it comes to that like they're waiting in line even though they're zone Z. It's like, I don't want to be running to just try and not get a middle seat. But I guess they
Yeah,
have assigned seats now, sure.
they do have assigned seats now. Actually, once you like know the Southwest system, you know how to not get stuck with a middle seat. You can get an earlier spot, but you know.
Delta all day, baby.
Okay, well, yeah, if you live in LA and you live at a hub, that's fine. But like us San Diegans are roughing it with second tier airlines.
San Diegans. Okay, great. Let's get into the episode.
I know. Let's talk about finance. Jeremy survived the cartel
Woo!
warfare, and now let's talk about index funds more.
Okay, let's get into our first segment. Hot topics.
Hot
I
topics,
actually
man.
don't know
If
how far away we're going to get from
I know, if
the darkness of the world in this hot topic, though.
I know, I feel like if with the speed of these news cycles lately, is this the hot topic of the moment, or is it a new one? So, what is the hot topic?
The hot topic is World War III, question mark?
I feel like they always, the World War One and Two it had such good branding. Everyone's like waiting for World War Three, but I just don't. Are they going to name? I
Do you
guess.
remember like when you were younger and you'd be like, it's not gonna be World War III, like it was a joke. And now it's like, oh, are we in World War III? Like actually?
I mean, that's the thing is like who's going to call it that? Who's going to decide?
Right.
How many countries need to get involved before it's not just some other name?
No, you're totally
I
right.
don't
I'm
know.
like, we the branding is not strong. Not to
Yeah.
make light of it, but like, wait, is it World War III? But yeah, I just remember that being like a little trope that you would say, like, "Oh, calm down, it's not gonna be World War III," or like, "I don't want to get into a fight with him, it's gonna be World War III," and now it's like, wait, it
Oh,
actually.
really? That was like a saying. Oh, I don't think
I
I ever
feel
said that.
like, I mean, chime in,
Hmm.
chat if you're listening.
This thing is not live.
It's not live at all. Chat, chime in, comment, let us know. Did you guys ever say that? Like, it's one of like, don't hold your breath. Remember we used to always say that? It was like, it's not gonna be
Yeah.
World War III. It's like that.
Yeah. It's
Okay,
not
so
rocket
anyway,
science.
you made a post on Instagram about this current war in Iran, and you had your chart, your infamous chart. Do you want to explain the Instagram post and what should we be thinking about our stock market? Like, what should we be thinking about our finances? What should we think? Should we sell it all? Should we buy more? Tell us.
I mean, first, before we talk about the finances, I just need to say that war is horrific and I don't support war and I don't wish, war on anyone. And I feel deeply for everyone who's impacted by it. And I don't revel in, you know, innocent people dying. I understand a school was already bombed in Iran,
Mm,
not to mention, the hundreds of military deaths already and several on the U.S. side as well.
mm-hmm.
Um, so it's going to be a little bit of a harsh segue into how's your 401k doing?
Right.
Because that's not the most important thing. But it's also not something that, I can control. I'm not the president. I'm not in the military. I don't support war. I don't believe I voted for this. In fact, I think, people on any side of the aisle, I don't think they voted for this. I thought that, our current administration was weren't they called the Board of Peace or something like that? I mean, they've used all
By
these
who?
gens by themselves because they always
Oh,
give themselves the nicknames. I
interesting. Hadn't
saw
heard that
some
one.
funny thread that was like, not the Board of Peace is Board of Peace with the alternate spelling of board.
Mm-hmm.
Um, and
Clever.
so, yeah, why are we bombing Iran? I don't know. This is all so far above my pay grade. And,
Right.
obviously the political pundits will be like, yeah, of course we're bombing Iran because their leader is a dick, like he has been for 37 years. And now we're going to do Middle East regime change because that always goes super well.
Right, right, right.
No, it doesn't. So I don't know. I don't know.
Sarcasm cannon?
Yeah, I don't the sarcasm cannon. Uh, we don't need the nuance cannon. We need the sarcasm cannon for that one.
Mm-hmm, mm-hmm.
I'm surprised how
Sarcasm.
rare I'm sarcastic on this podcast. Anyway, so the atrocities of war aside, what do you care about? How's your 401k going to do? The answer is, I don't know. And so, what I did is I went back and made a chart looking at the 10 years of the S&P 500 total stock market return following the beginning of any U.S. involved major war over the last 100 years or so. And so you can look at, World War II, the Bay of Pigs invasion, the Iraq War, the Vietnam War, the Korean War, the Gulf War, and the range of the total return on those, what did I just mention? 1, 2, 3, 4, 5, 6 wars over 10 years is between 108% and 461%. And if you average them all, it comes out to around 10% per year. And, sadly, the stock market just does what the stock market does. I don't know if that's sad, but, it's not like, oh, the U.S. is getting involved in a war. We're going to have a bad 10 years of the stock market. That's not true. I also think there's sometimes sentiment in the market or in pop culture that says, ooh, war is good for the economy because there's going to be more spending and it's going to drive up manufacturing. And, I don't think that's really bared out by the facts either. I think it's just the global economic machine churns on, and there's all these very short term ebbs and flows based on the speculation of, is this going to be good or is this going to be bad in the short term? And that's all those little bumps we see in the stock market. But
Mm-hmm.
when you zoom out the stock market goes up because the economy continues to churn on as long as the world continues to exist. If there's some sort of like widespread nuclear holocaust where computers don't work anymore and there's no transportation and the economies just crumble, banks don't exist anymore, that would be bad for the market. That would mean your 401k is probably not going to be worth much, but that also means maybe the cash in your checking account might not be worth much either, because commerce doesn't exist anymore. And is that going to happen? I have no idea. You should go listen to a prepper podcast if that's where your mind is. And it's not necessarily wrong either. I think that sometimes, after having just gone through that in Mexico, I was like, yeah, maybe we should have some like bottled water on hand or whatever it is, to make sure
You
that
guys
you
have an
can.
earthquake kit?
No, we have
You should have some
flashlights.
stuff
I
there.
think, yeah, there's a while where I was keeping like a 7-gallon jug of water, just around in case, but, you know,
All
we'll
right.
see.
Story
Hope
for
doesn't
another day,
happen.
I guess.
So anyway, war is atrocious, is an atrocity, but, and we're already seeing, and I think it does maybe add to the volatility of the market, because now there's these short-term guesses about what's this going to mean for the short term. Yesterday, the market opened down 2%, which is a kind of a big day down, but it finished down 1%. Today, it opened up 1%, and year to date, the market is basically flat. We're in March now, and the market's basically right where it started in the beginning of the year. And, I know it's really tempting to say, okay, what should I do about this? What moves should I make to, for my finances to react to this? And the answer you're going to get on this show is nothing. You should keep staying the course. You should do the things that you can control. You can limit your expenses. You can get those raises at work. You can earn more, spend less, invest the difference. Keep doing it early and often. Minimize costs of your investments. Those are the things that you can control and that are going to help you result in a better long-term outcome. But selling, predicting when the market's going to go up and down is not going to help.
I mean, anybody who knows you knew what you were going to say.
I know. But you know what? Even people who know me, 99.8% of their life, they hear other people talking crazy things into their ear. And so our job, Jen, is we need to talk rational things into the ear. And the 0.2% of your life that you can listen to the PFC podcast, we're just going to keep chirping the same little rational things.
I love it.
And because you might say, hey, I've been hearing a lot of crazy things. What would Jeremy say about this? And then I say the same not crazy thing. I'm like, oh, okay. Because the one time I say, dude, sell everything, just light your house on fire, run for the hills.
I'll be like,
Then
that video is AI.
then shit's real. Yeah, that's mad. It's either fake or
It's
Mad
really gone
Max
down.
scenario.
Yeah.
Go get some jugs of diesel.
Okay.
All right.
All right. Let's move on.
Let's move on.
Our next segment is Money. Can I ask a dumb one?
This is where you get to ask smart questions to dumb people. What do we have today?
Okay, we've got Dylan, who asks, I'm 27 with 1.2 million in a Vanguard target date fund. According to past results, Vanguard TDF has 4.1% average real return. VT has 4.87% average real return. Adopting Bill Perkins' die with zero philosophy, isn't it best to just invest in VT and have 3 years of living expenses?
All right. Dylan. Do we know where Dylan's from?
We don't know where Dylan's from.
Dylan,
So
where are you from,
apologies. Man? Yeah.
Sounds
Go ahead
like
and let
you're
us
from
know.
the U.S.
Let us
all
know
right,
in
so
the chat.
it was a very smart sounding question. He talks about, let's break down the question first of all.
Okay.
So he's talking about, he's 27 and he has
Yep.
$1.2 million in a target date fund.
Dylan.
First of all, Dylan, like, I don't know where you got $1.2 million. That's incredible. Either you're hugely successful in some tech field or something like that, or you had some sort of windfall or inheritance. I don't know, but that's like absolutely crushing at 27. And he's got a target date fund. As a reminder, target date fund is just a combo of a U.S. stock market index fund, in Vanguard's case, an international stock market index fund, and a bond index fund. Basically a nice basket, like a combo menu of these different funds that are perfect for your age.
Mhm.
And he says, according to past results, The target date fund has a 4.1% average real return. Real means after you account for inflation, how much actual additional spending power do you really get? How much actual real growth is there? Not just the opposite of real is what's called nominal, where the number goes up more, but if everything costs more, you don't really get any benefit from that. So he says it's a 4.1% average real return, and VT has a 4.87% average real return. So actually, and VT, by the way, is the Vanguard Total Stock Market ETF globally, the Vanguard
Mm-hmm.
Total Global ETF. So it's basically almost exactly like a target date fund, but no bonds. And
Okay.
so to compare those two things, a target date fund has US stocks, international stocks, and bonds. Or to put it more simply, a target date fund has global stocks and bonds, and VT has just global stocks.
Uh-huh.
The target date fund increases the amount of bonds as you age. So when you're in your 20s, like Dylan is, it's 90% stocks. But when he's my age, 45, it's going to start introducing more bonds. And then when he's like retirement age, like 65, it'll be like a 50-50 portfolio, half stocks, half bonds. And he's saying, hey, since the stocks go up more, why don't you just have 100% stocks and then a big pile of cash to basically wait out any of the dips in the stock market? So if the stock market is down for 3 years, you can just live off of your cash for 3 years, giving it time to recover, and then you can go back to your higher performing stocks. So let me break down some things. First of all, looking at this past performance is a relatively short history. VT was incepted, it was introduced to the market in 2008, which was kind of a bad time to introduce a fund to the market because the market was in free fall around the time this was created. And so I want to put a huge amount of faith in what the market's done between 2008 and 2026. It's like an 18-year time frame. Second of all, your numbers are not right, Dylan. You seem like you're a smart dude. You've got it going on, but you made a big mistake. You were looking at the return. I don't know what you're doing, but based on the numbers, this is my guess. You're looking at the return of the price, the share price only, meaning the dividends both of these funds kick off, you were taking and flushing down the toilet. If you look at the actual, what's called total return, that means the increase in share price plus the dividends you get reinvested, the total return you get is not around 4% over the last, since the inception, which is what I assume what you're doing since 2008. The nominal return, that's the numerical return for VT, is 8.5%, and the real return is 6.1%. And so basically you were 2% off because you weren't counting the dividends. And that actually unfairly hurts bonds because bonds generally don't go up in price at all. So their share price return is always going to be zero, and their real share price return is going to be negative. If you, for example, if you buy $1,000 bond, give someone $1,000, they promise to give you $1,000 back in 30 years. Your real return of that share price, that $1,000, will be negative. The $1,000 they give you back in 30 years will be worth much less after inflation than the $1,000 you gave them. The whole point of bonds is to get those dividends, those coupon payments, those bond interest payments along the way. That's the entire point. And in your analysis, you were deleting those coupon payments, which made the target date fund look terrible. Because in fact, I went with VFIFX. I don't know which target date fund you were using, but I was using that one, which is a 2050 fund, which is, I think, even up until now, is almost entirely still about 90% stocks. But the nominal return over that same time period, going back to 2008, is 9.75%, and the real return is 7.29%. So to compare, the stocks, which you claim are higher performing, 6.1%, the target date fund, 7.3%. Crazy, right? And so, first, your analysis is wrong. You're actually wrong about those numbers. The target date fund actually outperformed the 100% stock portfolio over this period. But I'll say that might be unusual because the reason I think this looked so bad is because of this 2008 timeframe where stocks did really, really bad. You could absolutely find a time frame, and most time frames, to be fair, where 100% stock portfolio will do better. So here's my real answer to you. And by the way, you might be right. I think what you're saying isn't crazy. Saying, hey, there's like a no bond crowd out there that says bonds are dumb. Why would you invest in something that we all kind of agree is a lower performing asset class when you could just perform, you could just gut out the, and the trade-off is you would only really do bonds because the risk of drops is a lot lower. And
Right.
so you get a more consistent but smaller return rather than the more volatile but higher return. And he's saying, hey, why don't we just use a big cash buffer to balance out the volatility, or wait out the volatility, and then take advantage of the high return. You might absolutely totally be right. And I'll say there's lots of reasons you might want fewer or no bonds in your portfolio. One is you might have a pension. Like, let's say you're a teacher, you retire, and the pension kicks off $50,000 a year of income. That pension, that recurring income, kind of replaces the purpose of bonds, which is to provide income. And then you
Mm-hmm.
might as well put more of your portfolio into the high performing but more volatile stocks. You might have Social Security. I think a lot of us will have Social Security. Maybe we don't know the future if it still will exist by then, but that
Right.
totally, you could count that as part of your bond portion. You count against your bond portion. You might have real estate income. A lot of investors, have a rental home or two that's providing cash. So that kind of could take place of the bond portion. Or you might have a big cash buffer, like you suggested. Say, hey, I'm just going to keep a 3-year emergency fund instead of a 6-month emergency fund. All these things are totally rational. And if you want to do it, like, you have my blessing, Dylan. But here's the argument against. When I talk to real human beings in their 60s and 70s, they don't feel the way you feel, Dylan. You're
Hmm.
27. I'm 45. I'm like maybe halfway between. I still, frankly, I'm kind of feel more like a 27-year-old. And I even financially, I'm like, yeah, I can weather the storms. That's just how I feel about my own investing. But
Mm-hmm.
when I talk to people in their 60s and 70s, they don't feel that way. They don't want World War III the next time, whatever clown's in the Oval Office. I'm sure whoever's listening, I'm sure you don't like this guy or the last guy. I can virtually guarantee it these days. So you probably think some clown's been in the Oval Office in the last few years. They don't want him doing something stupid, or her, hopefully, one of these years, right, Jen?
Don't hold
They
your
don't want,
breath.
I know, I'll be 47 presidents deep and I'm still not able to breathe.
Mm-hmm.
But they don't want the president doing something stupid, see their $2 million portfolio become $1 million, and now they're worried about, oh, like my inheritance, or I'm not going to be able to pay for food or whatever. They say, I just want to lock it in. I've done it. I got here. I'm retired. I want to lock in how much I have and then just get a paycheck every month. That's kind of what bonds are for. And
Mm-hmm.
so when you're making the decision, am I going to go 100% stocks with a bigger cash buffer or go with the target date fund? I think you should at least have a real honest, you know, look in the mirror and say, okay, will I feel the same when I'm 67 as I do when I'm 27? Or is
Mm-hmm.
it possible I'm going to like that income? I'm going to like those paychecks coming in monthly, and I'm going to be okay without I think even in Dylan's estimate here, he said I would end up with 45% more money. That logic might be true when you're 27. When you're 67, you don't really care about 45% more money in 30 years. You care about, am I able to pay for my, you know, travel and cruises and living expenses or whatever now and this year and next year? And he even mentions Die with Zero, which is great because, you know, Die with Zero, the whole point of that book is, hey, when you're 67, if you want to do something, do it, because when you're 87, you're probably not going to feel like jumping on a plane. You're probably not going to, even if you survive that long, your physical fitness and health won't be able to support the same lifestyle that you have now. And so spend your money now. And so that kind of speaks more to the idea of, hey, put yourself in a portfolio that optimizes for living now, not for 30-year growth. So the no bond crowd, everyone, I feel like the no bond crowd comes from me. They're like, Jeremy, bonds are stupid. They have low returns. And I'm like, yeah, that's fine. You don't have to do bonds. I will say, I think there's a little bit of chasing past performance in there because bonds have done really bad lately because rates have gone way up. When rates
Mm-hmm.
come back down, bonds are going to shoot back up. And so just like even Dylan's own analysis was wrong, the bond portfolio actually did better since 2008 just because of, randomness or whatever over that time frame. That might happen again in the future, right? So I guess here's the other thing is, you might be saying, okay, well, I will just stick with my 100% stock portfolio, and then I'll wait until I'm 67 to see if I feel the same way and change then. The problem with that logic is what might happen is when you're 63, World War V will be the world war we're on by that point.
Oh God.
And yeah, I know. And at that point, you might say, you might see the market drop in half and be like, oh, I can't do this. Jeremy was right. I don't want to risk it going down by 90% like it did during the Great Depression. I'm going to lock it in at losing half. And then you sell everything and convert to bonds or whatever, and then the market goes back up. That sort of timing the market is much worse than getting the right portfolio, you know? And so that's why I love target date funds, because they're kind of protect you from yourself a little bit. So,
Mm-hmm.
you know, Dylan, I don't think what you're saying is crazy, but I still, you know, you're 27 with 1.2 million in a target date fund. Clearly something's been working for you.
Right.
I would keep doing it. If you want to tilt a little bit, say, okay, I'm gonna do a target date fund and a small cap value fund, and, you know, VT, like do both. That's cool too. I'd give both of
Mm-hmm.
those portfolios an A plus. But just, yeah, be real with yourself about what you might want when you're 67, and don't wait until then to make the decision, because it might be too late if World War V happens then.
Mm-hmm. Wow. Thank you for your question, Dylan. I hope that was helpful. And I hope that you don't feel too discouraged about the World War V that's going to be happening when you're 67. Let's get into our next segment. Scroll Patrol.
Scroll Patrol.
Okay, so I'm going to, this is a video that I got from the internet, and I'm going to make Jeremy watch it and react. But I'm going to give you some context after you watch it. So click on that, watch it with me, and then I want to give you a little bit of context afterwards.
Okay. I have never seen this video before.
What do you day trade?
The Australian dollar over the US dollar.
How many trades do you make a week?
5 good ones a day.
You use a broker or do you do it yourself?
I do it myself.
Do you have any licenses right now?
So they've expired on my end because I wasn't sure I was going to go back into finance. I want to get into crypto as well.
What's the price of Bitcoin today?
About 100 grand, I don't know at the moment.
You trade no other currency?
Not at the moment, no.
Did you vote for Trump?
I didn't vote, but I would have voted for Trump, absolutely.
You cop out.
Well, I wasn't here. I know it's a cop-out. I'm absolutely conservative, though, without a doubt, and I'm happy that he won.
I'm actually really sorry about him. I'm sorry.
No. It's so the way this works is like once a quarter, Jerome Powell, the head of the Fed, he speaks on things, and those things cause ripples in the market that I trade in.
How do you know, like, the meeting's going on?
Oh, I check like all the time.
Oh.
There's like,
Like, do you get like a Facebook invite?
This is like my job at this point, so I'm like half listening to that because I kind of understand where it's headed.
Okay.
Okay, so context.
There's like 2 videos there. It went
I
from
clipped them
this-
together. I clipped them together because I
Okay.
needed you to have more context, because it was like
Okay.
this person. This is from a reality show called Love is Blind, and it's a dating
Oh, this is
show.
Love is Blind?
This is Love is Blind, and there's a dating
Quick aside.
show.
Did you
yes.
watch the first season with the vet
Yes.
guy
The vet guy.
that everyone hated? He was like the heel of that season.
I
The
don't know
Indian
who that
guy.
is.
He was
Oh,
Indian and he
that's
didn't.
not the first season.
Oh, it's not?
If it's
Oh,
the
right.
Indian guy that I'm thinking of.
He
But
said he didn't like Indian women, but then he matched with an Indian woman, and then he dumped her because she
Yes.
wasn't hot enough or something.
definitely not the first season, but yes, I watched that. I've watched them
Oh.
all.
Oh, anyway, I was on his podcast. That's my claim to fame.
Wait, we have to talk about that. We have to talk about that. That's crazy. Why? What does he do?
Like, he was just trying to like become an influencer post like Love is Blind fame, and his like team reached out to me and was like, "Do you want to be on the podcast?" I was like, "All
How
right."
was the conversation?
I don't know. It's fine. Like, you know, I mean, I didn't be like, "You were a dick for dumping that girl." You know, we just
He's
talked about.
insane. I literally just saw a clip of him today as I was like looking at this stuff, and he was like, "All these women like attractiveness is subjective, and like I don't even like any of these women except for Vanessa, who's the host." And then Nick Lachey's there, and he's like, "You're talking about my wife?"
Oh,
Like,
yeah.
he's crazy.
He
Oh my
made
God.
some very bad, like very bad PR moves in that show.
Great TV, fantastic TV. Anyway, so this is from Love is Blind, this current season. These are 2 people that matched, and he has this like very interesting timeline of what his actual career is. And I knew, like, as soon as I saw that he was claiming he's a day trader, I was like, okay, I gotta get some clips here. So the first clip was on TikTok. The second one, I was like, I need that context of like him watching the Fed meeting to like figure out how to date. I was like, bro. So anyway, I don't want to inform too much, but you can tell us what you think about Alex here.
So, he's this youngish finance bro.
Mm-hmm.
He's got some tats. He fancies himself a trader.
Mm-hmm.
He says all he trades is, was it U.S. and Australian currency?
Oh,
What was it like?
I was so confused. Yeah.
And so that's called foreign exchange currency, or Forex, or foreign exchange trading, or Forex. And, it just has this following of people who think that they can, buy the Australian dollar for 88 cents and sell it for 90 cents based on what's going on in the world. And, you know, in my opinion, I think that this type of trading, especially by, amateurs, which, I think he is, because he's not working for some huge bank that has the ability to get advance notice of things, is fake. I don't think he would ever allow any sort of audit of his finances to prove what kind of income he's making. But everyone I've ever seen who does this isn't actually making money doing it. They might make money sometimes, and what happens is they convince themselves, they have a system, they read the books, they look at the charts, they read the news, like this guy's clicking refresh on Jerome Powell talk, and that gives him some sort of edge over the
call that we all have access to, by the way. He's actually gets like a work call.
Exactly. And he's like,
she's like,
4 minutes later he's going to make one of his trades.
Yeah. The call that
dude,
everyone saw. So right. How is it?
And the bots have already traded on information, before you even process the words he's saying. So good luck. But he thinks he's got this system, and so he buys at one point and then he sells. And he's like, I made $1,000 today, and he's like, it's working. But the problem is that was just random. It's as though you went to Vegas and you're looking at a roulette wheel, and in Vegas, roulette's where you spin a little ball and it lands on red or black, and it even shows a history of where the ball has landed under next to a lot of roulette wheels. So it can be, there's black, black, red, 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 black, black. And so sometimes you'll say, oh, it's red 6 times in a row, it's got to be black now. So here's my system. I'll wait till it's red 5 times in a row, and then I'll start betting on black, because it's sure to flip the other way. And the problem is that's just random. Every single roll is independent. The 6th roll is no more likely to be black than the 5th roll was, just regardless of what happened. And the markets are the same way, because all the information he thinks he has, whether it's Jerome Powell calls or past performance or charts, or there's all this sort of analysis these traders do. They convince themselves it's a skill when it's purely luck. But then 3 years later, they all quit this job because they haven't been making any money and they've been doing something else, right? And so, if I was omniscient and I could go look and do an audit of this guy's trading, I could virtually guarantee you he's very close to making 0 money. Maybe he's even lost money. And so, yeah.
That's what folks are saying. I love when we can have crossover between our two worlds, Jeremy.
Bad job. I know I actually did watch one episode of Love is Blind. It was the one with the guy's podcast I was on. And people even so at the time, he's kind of dated now, but people at the time were like, oh, that guy's a dick. I was like, oh, not endorsing his view of women. I'm just trying to spread the good word about index funds. I don't know, this podcast even still exists.
That's so funny. I'll have to go check out that episode. Amazing. Okay, so are you rating this?
Oh, yeah. I give it an F. I think this is made up nonsense, and I think that his mansplaining at the end to this. Is that his match that he matched with? His girlfriend or whatever?
His fiance. Thank you very much.
Sorry, his fiance. Oh, sorry. Wait, sorry. I missed the headline. Alex 30 soccer coach. Of course, he's a soccer coach. Everyone who's doing Forex trading, making $1,000 a day, also has to go coach soccer.
Jeremy, there's
$9
so much
an hour.
more I want to tell you about Alex, but we don't have time. We just don't, and it would be not finance related at all. So I had to find the little bits.
All right. I'm saying this as a volleyball coach, by the way. I love coaching. I would never describe myself. I mean, I would be I wouldn't be offended, but I would say it's not very accurate to say that that's my career as a volleyball coach. I'm like the scroll beneath my name. I volunteer as a volleyball coach because I'm exceedingly wealthy. I don't have to be a soccer coach because I'm day trading foreign currency and mansplaining about Jerome Powell calls to this, very cute
Jeremy, you
girl.
don't even know he had several injuries. He was going to be a soccer star until those surgeries. Don't you know?
Well, he probably should have done that because that's better than trading. That dude is not going to make money.
Alex gets an F. Makes me happy because he is trash. Okay, let's
I didn't
move on.
I didn't even know it was trash. I'm just going based on a 60-second clip you put together.
I know. This is why we do this, because you need to blind react, but I will give you additional context once you've reacted. Okay. Fantastic. Let's move on to our next segment. Money. Jeremy had time today.
I had time. We're in the comments. What are we doing?
Okay, let's stick with war. You had the Instagram post, their most recent Instagram post at the top of this episode. And we had some comments in there. Most people were happy that you spoke up on it, or just we're happy to have you weigh in on what you think that they should be doing. But we did have one commenter say, you should buy between 2 to 4 years after and sell between 5 to 6 after the war, because there's always a dip correction. Always the people that have an interesting comment that their grammar is messed up. I'm I feel, I'm buy BY, not BUI. I'm just bro.
And what's this guy's username? Alex Soccer Coach Love is
no.
Blind?
I hate you. I block out the username. We do not dox anybody on the Personal Finance Club show.
Hey, they're posting it publicly. I think we could totally post it publicly, but yeah, we don't need to because
that's not going to be my cross to bear.
This comment is essentially the culmination of the first segment, the war chart, and Alex's perspective, which is I can look at the charts and decide what to do. But even this comment is so ridiculous. You should buy between 2 and 4 years. Okay, so this is year 0. The war broke out a week or 2 ago. So somewhere between 2008 or 2028 and 2030, we should buy. Then we should sell somewhere between, I'm having trouble doing the math, 2031 and 2032. Where in there? I don't know, somewhere in there.
And when do wars end? It's you know what I mean? What are you talking about?
But he's squinting, looking at this chart. He's like, no, see, there's a dip there, and then it goes up there. But even in these, 6 wars I included, they all dip at different times. It's just chaos. And so this, he's basically doing what's called technical analysis of saying, okay, a technical analysis is essentially that red black roulette thing. It's okay, if it's 5 red in a row, then it's going to go black. Or if they have these things called ceilings and floors, and if it hits the floor, it's going to go back to the ceiling or whatever. Technical analysis people can be that guy's, he doesn't know what he's talking about. And you're right, except for I know everything that you do is nonsense because it's just not backed up by actual data or results. It's backed by, guessing. So he's trying to do a technical analysis of these charts and saying, hey, if you sell in this time frame and buy in that time frame, you'll have missed the dip that always comes along with wars, which would be great if it was true. But even by his own assessment, he can't narrow it down to more than a 2-year time frame. And the market can go crazy in not only 2 years, but in a day or two. If you, they always say if you miss the few best days of a year, you'll have no gain instead of 10% gain because the few best days are the whole gain each year. And so when he's giving you a 2-year window, it's just ridiculous. So, no, Alex Soccer Coach, you should not be day trading best in the war. And also, by the way, it's not in 2 years, it's going to be 2030. And you're remember 2 years ago when we bombed Iran and I said 2 to 4 years later, there's going to be a dip in the market. Now I'm going to go buy because 2 years, 2 years ago, there's going to be different headlines, right? And I'm not trying to minimize this war, but 2 years before this war, there was the, Israel-Gaza war. But 2 years before that war, there's the Ukraine-Russia war. But 2 years before that war, there's, there's so many wars I don't even remember all the wars, but
right.
So you're not going to be
2-year window is hilarious. I'm what?
Yeah. And so, I think I respond to that comment in Instagram, the grimace emoji, this.
You did.
Just because, no, you don't do that. Even you're by your own admission, it's not, you don't know what you're doing. And And the good news is if you don't know what you're doing, you're in great shape because all you got to do is buy. Buy low, buy high, never sell until you retire, and then sell a little bit at a time, just what you need. That's how you do it. That's how you get rich. When you think you're smart and you're not smart, I'm looking at you, Alex. I'm coming for you. I don't even know you. Sorry, dude. But like, you're kind of given think you're smart, not smart. That's what I'm seeing from that very short clip I saw. That's when you're going to learn the expensive way 3 years from now when you figured out that, Forex trading Australian currency and, listening to Jerome Powell's call because it's going to give you some insight is not going to do what you think it's going to do. So, yeah, don't do that.
Got it. Okay. We made it to the end of another episode.
It was a good one. Sorry about the war, but keep holding all of your investments.
Yes. Jeremy, break us off with those rules.
If you want to build wealth, you got to follow the 2 rules of Personal Finance Club. Rule number 1, live below your means. And rule number 2, invest early and often. See you next week.
The Personal Finance Club show is produced by Jeremy Schneider and Jen Mundia. Music by Esabalu and Homie. Send your questions to podcast@personalfinanceclub.com. The Personal Finance Club show is co-hosted by Jeremy Schneider, who is a co-owner of Nectarine, an SEC-registered investment advisor. The views expressed on this show are those of the hosts and guests and do not necessarily reflect the views of Nectarine. Please refer to hellonectarine.com for all relevant disclosures. This podcast is for informational and educational purposes only and should not be construed as personalized investment advice or a solicitation to buy or sell any security. Listeners should consult their own financial, legal, or tax professionals for advice specific to their situation.